Guarantors, when you should and when you shouldn't, when you can and when you can't. Stay tuned. Hi all, Darren Green, Mortgage Broker Perth. Today I'm going to talk about guarantors and how they can help especially a first home buyer, but anybody really when buying a property, to help keep the costs down and also help negate the need for saving so much deposit. I've prepared a little scenario that I'll show you now. It's for a first home buyer. It's fairly basic, but it just gives you the general idea of what a guarantor is and how it works.
So here's the little house you bought. I apologise for the artwork in advance. I'm more Picasso than Rembrandt. But let's just say you paid $400,000 for this little house. And now with the fees, your settlement agent, your rates, those sorts of things, come to around $3,000 for a first home buyer. But to offset that, you will get a first home owner's grant of $3,000. So the total that you will need will actually be $400,000. Now, no bank will lend you $400,000 for a $400,000 purchase, and if you have no deposit, this is where a guarantor can step in and help. Now, let's assume that your parents or grandparents or someone close to the property, they are willing to put up a guarantee for. So how it would work, the bank would then lend you $320,000 against your home, which is 80%, so no mortgage insurance, and then the remaining $80,000 would be lent against the guarantor's property, so that would be their liability if things went belly up. Doing it this way, there's no lender's mortgage insurance required, which is a big saving, and also you need to have no genuine savings, so you can go in with no deposit at all.
So there's just an example of how a guarantor basically works. Now, I guess the most important thing when doing a guarantor loan is the guarantor themselves, and the main question the bank is going to ask is, will they be put into hardship if this all goes belly up and that guarantee is called upon? So if the guarantor is, say, a grandparent who are in their 70s, living on the pension, that sort of thing, they're not going to make a good guarantor because they couldn't answer that question, that they wouldn't be in hardship if things went wrong. They would be in hardship, basically, and a bank just doesn't want to do that. I mean, that's how they get on the current affair. It's not what banks are trying to do. I mean, a guarantor, though, perhaps a parent in their late 40s, early 50s, still working, if things went belly up in that case and the guarantee was called upon, I mean, I'm sure your parents wouldn't be happy, but they would be able to cover that $80,000, make the repayments on it, without suffering any hardship. So that is the main thing as brokers and banks that we have to cover off on when using a guarantor for a deal. Look, every case is different and they're assessed in that way, so of course if you have any questions at all, you can give me a call on 9525 0566 or leave me a message on Facebook and I will respond to that.